This is Colin Cattell with Palisade Radio. Returning on the show with us today is Jeb Handwerger, publisher of GoldStockTrades.com. Welcome back to the show, Jeb.
Thanks, Colin, for having me back on the show.
I think we first met in 2011 at the San Francisco Gold Show, which I will mention now no longer exists due to this bear market we've been in. At that gold show, though, they held a rare earth symposium, and you were a speaker at the forum. It was a small get-together of a couple hundred investors, and at the time, the rare earth sector was pretty hot. And I want to talk to you about rare earths again today because not very many people are talking about them. They've been an extended bear market along with all of the other metals. And there was recently a 60-minute special about the shortage in the rare earth sector.
Yes, Colin, thanks so much for that question. And I did meet you at that rare earth symposium. And that was a day that was, there was a lot of interest from the 2010 bubble in the rare earth prices. That's and in 2011 there was a conference a day at the San Francisco Hard Assets, which you're right no longer exists anymore, on dedicated to rare earths, in which rare earth companies were presenting from 9 in the morning till about 6 o'clock at night, and it started off with a debate in the beginning. Between three analysts. I was one of them. And then it went into company presentations. And one of the discussions in the debate, one of the analysts believed that Molycorp was going, to the roof. And I was very bearish on Molycorp back then because, I was specifically looking for the heavy rare earths. And, I found a company called Ucore that I've written about for a couple of years now. And I also found a company at that show that I never heard about before. That's when I became aware of a company called Quantum Rare Earth Developments. And I invested in a private placement shortly thereafter in a company called Quantum Rare Earth Developments. In December of 2011, I found one company that I really liked because of the niobium and the scandium potential and the rare earth potential in Nebraska. That quantum rare earth development was about 10 cents at that private placement. It then later became called a company called NioCorp. And I continued to invest in the company, 15 cents. Today, the stock, or last week, the stock hit $1.80 and it went on the Toronto Stock Exchange, and has since been taken. Mark Smith is the CEO and has been the #1 performing stock during what could be known throughout history as the worst historical bear market in junior mining history ever. That goes against any statistics. It's a complete anomaly. It makes historical means look, it's way below its historical means. The valuations are completely out of whack. But during that time, I was lucky, I was blessed to find a couple of companies that have maintained their market cap. And that's why it's crucial to study and take seriously analysis in the junior mining sector, because there is the potential to pick the one or two winners, even during a bear market. And it's easy to pick stocks during a bull market, especially in the junior sector, where even the crappiest companies rise in a bull market, the crappiest promotions. So they even rise in a bull market. But to find the winners, that's where the challenge is in a bear market. And we've been blessed to find a couple of them in the rare earth sector. And as your question talked about the 60-minute special, that was a big event where it's now coming back to investors and to the American people, especially, that the U.S. is completely dependent and these companies like Apple and these huge market cap companies on the New York Stock Exchange are completely dependent upon these heavy rare earth critical minerals such as dysprosium and terbium and europium that come completely from China, and it's beginning to change, and people are wising up that there's got to be a change here. We have the U.S. Senator, Alaska Senator Lisa Murkowski. She's the head of the Committee on Natural Resources. So she's a big supporter of U.S. independence of rare earths, and investors must realize that these critical materials are the used in the top secret, the most important defense technologies. And we've been a long-term supporter of Ucore Rare Metals, who owns the high-grade heavy rare earth project in Alaska, the Bokan deposit, which we believe is the highest grade and highest quality project to get into production. And we've been long it for many years. We also, continue to hold the Naya Corp, that's going to be coming out with a PEA, and they recently announced scandium, in addition to scandium in their resource, and other critical minerals that the Chinese control, graphite. That's going to be a big area because I see a huge amount of growth in the lithium-ion battery sector over the next 5 years.
Well, Jeb, on the topic of critical minerals, another one that we can talk about right now is uranium, of course. Rick Rule just penned an article published last week that his call for a uranium bull market was premature. And in his revised thesis, he believes that the falling gas prices worldwide mean lower energy costs for Japan, potentially pushing back the restart of all these nuclear reactors. At the same time, though, uranium prices are firming up, and when compared to oil, for example, they're holding up quite well. They're in fact in a bull market comparatively. Where do you see uranium right now?
Well, even experts make the mistake, I've seen, to compare uranium to oil and the supply-demand fundamentals, and they mix up the two. They are completely different supply-demand fundamentals for uranium and oil. And I recently, end of February, I wrote an article on my blog about that. There's actually capital fleeing, in my opinion, fossil fuels and going for nuclear energy. And the way that we see this, I mean, you've seen a huge oil and natural gas decline. I mean, oil more than 55% drop, natural gas more than 35% drop. During that time frame, uranium's up. I'm looking at the Uranium Participation Corp, which can be traded as U on the Toronto Stock Exchange. That's up over 15%, while these other commodities are down much more. So this is proof that the uranium sector has completely different supply-demand fundamentals than fossil fuels, and there's a reason for this. The Chinese, the major emerging economies, they're growing at a much faster rate, and they're choosing nuclear, and there's more reactors being built now or operating now than there was before Fukushima. And this is even before the Japanese starting to turn back on reactors. So, and this comes at a time where production has these producers are cutting back constantly, and most of the supply comes out of Russia, and they control probably 3/4 of global somehow in the global nuclear chain, and this could have a huge impact. If Russia chooses to use uranium, 60 Minutes had a piece about how China controls the rare earths. Russia controls uranium. And this is a critical asset, just not for the United States, because the U.S. is the largest consumer of nuclear power, but Europe has over 160 nuclear reactors. But I've been following the U.S. uranium miners for many years, and most specifically, Your Honor's Energy, which can be traded as URZ on the New York Stock Exchange, which is in the process of merging with Energy Fuels. And this is going to create a substantial U.S. American producer with a significant market cap. And that's going to be, I think, the focus is there's going to be eventually a search for additional supplies from Mother Earth in the United States for uranium. And, as you said, Rick Rule may have been premature. I think a lot of people have been, including myself, have been premature with uranium. We're waiting. But my belief is that the longer, the more depressed, the longer the base, the more powerful the subsequent upswing. And the more of these mines being shut down, the more of these marginal producers having to cut back. These mines don't turn on so quickly, and that's when you have price gaps and price spikes. And uranium appears that it could be setting up for that. Whether it's 6 months or 12 months or another 18 months is anyone's guess, but it is looming on the horizon. And I don't think the cheap fossil fuels has anything to do, the supply-demand fundamentals with oil has nothing to do with uranium, and that's clearly shown by the outperformance over the past 9 months.
And another point that you've been talking a lot about, tension in the Middle East, tension in Russia. I think that people have become so numb to all of the conflict in the Middle East that there's not even much talk being given to Saudi Arabia and allied forces striking rebels in Yemen on Thursday. Russia and Ukraine, of course, is not getting very much attention anymore, but that's still alive and well, and the fight still goes on there. How do you see tension in the Middle East and elsewhere affecting, say, the price of gold or the price of oil? Because a lot of these conflicts are directly related to the fall off in the price of oil.
Well, I think what we've seen with the price of oil, the recent decline, has been a black swan event, and part of that is to benefit the U.S. dollar. So we've had these huge commodity corrections over the past couple of years, past 3-4 years. We've seen this huge rise in U.S. dollar, U.S. bonds, U.S. stocks. Everything else is declining. I mean, you look at all the other currencies, even the Swiss franc. I mean, even when they decoupled from the euro, it had a quick bounce and then straight back down. So there is a policy, strong dollar, strong U.S. markets. And it's going in an incredibly strong bull market for 4 years, and it's now reaching almost bubble territory. So there is volatility, especially with what's going on in the Middle East with Iran, a nuclear Iran. Tensions between the United States and Israel for the first time in many years. Tensions with Russia and Ukraine, and how that may impact the energy markets into Europe. We have a major civil sectarian war taking place in the Middle East between the Shiite and Sunni populations all over the Middle East. So these are extremely volatile times. And studying history, studying past economic history, the place that I see safest to be is in real wealth, natural resources, precious metals, and those will come back into favor when there's volatility. And this U.S. dollar market has begun to show some signs of beginning to break down. For instance, when the the Fed was not so quick to raise interest rates as people expected. We saw a major sell-off in the dollar, and I think that you're going to see the Fed's going to be continuing to hold off. The global economy is not as good as what many people realize, but there's some exciting areas if you're following the mining sector to be in, where I see potential gains that could be really outsized over the next couple of years.
Jeb, do you have any parting thoughts or predictions about 2015, how the markets might play out? We know that things are getting a little bit overpriced in the general equities, but still a lot of people that have been stuck in the junior mining sector for the past few years don't see any end in sight, and maybe that's a turning sign that something soon is to come. What do you think is going to happen this year and next year?
Colin, we started off this interview and you mentioned in the first question an observation that I think is really important for many investors to consider. The San Francisco Hard Assets Conference was one of the largest conferences in the U.S. during the resource market boom. That conference no longer exists. That is a sign that the public is completely unaware of the mining sector, or has completely abandoned the mining sector, except for a select few. It's those select few that can become millionaires, extremely wealthy, because now you can pick up all these assets that were once trading at much higher valuations for literally pennies on the dollar. And we're seeing increased M&A activity. The majors, they need to replace those reserves. They're seeing value. Every day or every week, we're hearing news in the gold sector, in different sectors of miners taking over these juniors. So this is the bottom. This could be the bottom, the absolute worst in the sector when there is no more a conference. And that's the time to really consider building positions and accumulating real wealth, real natural resources at rock bottom prices.
I think the lesson to be learned there is to not necessarily try to time the bottom exactly, but to start accumulating and continue accumulating when you become more and more certain and more signs pop up that the bottom is in fact in. And it's hard to argue that we're not seeing that right now. Whether the turnaround comes this year or next year, it will be spectacular. It will make people into millionaires, and there's a lot of money to be made. On that note, Jeb, thanks so much for coming back on the program. You're a good friend of mine and, of course, publisher of goldstocktrades.com. Always happy to have you. Thanks so much.
Thanks, Colin, and it's an exciting 2015.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen? Or are you too stupid?